there. I am doing part 2 of my videos on homestead exemptions. Yesterday I did a video on regular homestead exemption, which means you get $6,000 off if you are owner occupant, and the senior exemption, which allows you to get $5,000 off if you are 65 or older. Today I wanted to do one that addresses veterans. So we have 2 exemptions at least in our marketplace in our county, that address issues regarding veterans. We have a homestead exemption for veterans that are returning from a conflict. This one's a little less common and kind of an interesting exemption. You get to deduct $5,000 off your valuation of your home if you are a returning veteran from active duty in an armed conflict. So I don't know what they mean by armed conflict. If you're in Korea, is that considered an armed conflict? If you're stationed in Europe somewhere, I don't know what they mean by that. That would be something you'd want to check with the assessor. It is only good for 1 year, for the year that you are returning from active duty service. So that would take, say if you had a $300,000 house, they do a 33 1/3 assessed valuation. You would take from that $100,000, you would take an additional $5,000 off. And you would also be getting the homestead exemption because you're owner occupant, which is $6,000. So that's another $11,000. They would assess your property at $89,000 as opposed to $100,000. So that's probably going to reduce your taxes again by $800 to $1,000. The other exemption we have that may impact more veterans are people who have served our country and that are disabled. There are different exemptions for those folks, and it depends on the level of your disability. You do have to be certified disabled by the Department of U.S. Veterans Affairs, so there has to be a document provided to the assessor regarding that. And if you are, I believe I wrote it down here, 30 to 49% disabled as deemed by the VA, you get an additional $2,500 that you can deduct from the value of your home, so that will reduce your taxable liability. If you're 50 to 69% disabled, you can deduct $5,000. So that would be $5,000 in addition to your homestead exemption. So that would be $11,000 off the value of your property. And if you are 70% or more disabled, you do not have to pay any taxes, but there's a caveat to that. So the assessed valuation cannot be more than $250,000. What the assessed valuation is they take the value of your property, say it's $300,000 to make the math easy. They divide it by 33 1/3, which would be $100,000, and that's the assessed valuation of your home. So if the limit is $250,000, if your property is say up to about $800,000, you wouldn't have to pay tax on that. If it's more than that $250,000 assessed valuation, let's say your property is worth $1 million and you're disabled, you would pay tax on the difference between say that $850,000 and $1 million. So there would be some tax due, but the vast majority of it would not be. So if you have any questions, if you know somebody in your family, perhaps you're a disabled veteran, please feel free to reach out to me. I am not an expert in these matters, but these are exemptions that are available to certain homeowners that can save them money. And as I said yesterday in my video, if you don't take advantage of these or reach out proactively, no one comes looking for you to see that you have it. So please feel free to reach out to me. My name is Jill Lasek. I am with Beard & Warner in Naperville. My number is 630-816-8701, and I look forward to talking to you. Have a great day. Bye.